welcome to the weekly trend trader, how to do trend following. As always, what we're going to do is we're going to look at the Asian markets, the European markets, and the markets in the USA. If you haven't already, don't forget to subscribe. If you have subscribed, thank you very much for your support to the channel. Really do appreciate it. To like this particular chart and to share it with your friends, because you may have those who at this time want to make a part-time income, or maybe even have lost their job and they're trying to build a business. They're looking for something to do, somewhere they can work from home. And this strategy lends itself very well to that. So share that with your friends. Also, don't forget to turn on that notifications bell, because you can subscribe, but unless you turn on the notifications bell, YouTube will not be able to alert you to the fact that we've uploaded the latest video. And the information that we're sharing with you is 20 years of trading experience that I'm sharing with you. And the information I'm sharing is time critical information. So go ahead and hit that notification bell and you'll be alerted every time we upload a video. Now, what's happened this week in the markets? Well, there's been some more selling, and people are saying all sorts of things, that the world is about to end and there's going to be a crash and there's going to be this and that and the market's going to recover and the tech stocks are going to go to the moon and Tesla's going to go to the moon and all sorts of things. But what I look at is, how do you know when there's a trend? People talk about things and has the trend changed and so forth. So what I'm going to do this week, I'm going to go through the charts, but rather than just reviewing setups, which we already know what's going on, there's a bit of a sell-off going on, I'm going to review with you this week, how do you know what trend the market is in? Because we've had 2 weeks of selling on many markets, but does 2 weeks of selling make a trend? So let's start with the Asian region that we talked about, and let's consider firstly the Hang Seng. So the first thing that we need to do, if we want to know what is the current trend, is get a 2-year chart in front of us. So we've got a 2-year chart in front of us here, and we're going to look at the 52-week moving average. That is our guide to trend. Not 1 week of selling, 2 weeks of selling, 4 weeks of selling, 3 weeks of selling. Nothing to do with that. Look at the 52-week moving average, and that will tell you all you need to know about the current trend. So let's look at the trend here on the Hang Seng. Look at 2018, September, and look at the price. So in 2018, September, that first candle that we can see here on the left, the price was at 28,000. And the 52-week moving average was up at 29,000. Now, where are we now? Well, the 52-week moving average is at 25,500 and the price action is at 24,500. So the market for the last 2 years has been in a very clear, the Hang Seng downtrend. That's our first chart. Very easy to look at, very easy to work out what's going on. The Hang Seng is in a downtrend. Are all markets exactly like that? No. Let's go through a few more. Let's go over to China. So here's China. When we look at the Shanghai Composite here, this one's very different. 2018, look at the 52-week moving average. The 52-week moving average in 2018 was at 3,100. Where is the 52-week moving average now? 3,050. Only 50 points away from where it was 2 years ago. So in 2 years, it's done nothing. It's flat. It's only 50 points different from where it was 2 years ago. Then let's look at the price action. September 2018, the market was at 2,800. Now, when we look at what's going on currently, our last week close was at 32.50. Although that's a slight rise, forget about that. Look at the 52-week moving average. The 52-week moving average has been pretty flat running right the way through the middle of the price action. See that there? It runs right the way through the middle of the price action. And right now we've got a double top on the market and the market's falling back into that trading range, because that is what China is doing. It's ranging, it's flat, it's not going anywhere at the moment. So what do we need to do? To look at the trend, look at that 52-week moving average, look at it on China, and we can see China is a ranging market. It's flat at the moment. It's not really going anywhere. So that's China. Let's move it over to Japan. What do we see? Well, the Asian region looks pretty similar, doesn't it? All of the Asian region, when we check the region, very important to check the region. Check the region, and you'll find that when you check a region, you'll find the stocks in that region, or the indices in that region, are doing pretty much the same thing. Here, look, Japan ranging. Look at 2018. Look where the 52-week moving average was. The 52-week moving average in 2018 was at 22,500. Look at the 52-week moving average right now in September. It's at 22,000. Only a 500-point difference. Why? It's ranging. It's flat. It's not going anywhere. Doesn't matter about the market's moved up and the market's moved down. Where is the actual market going? We are trend followers. We're looking to follow markets that are trending. Every one of the Asian markets that we've really seen are ranging. So there's no real powerful trend going on here. The market is pretty flat. Has there been one or two little trading opportunities? Yes. But generally, the market is flat. It's not really going anywhere. If we look at what it's doing now, it's running up to 24,000. That looks like its major resistance level. If it gets there, what could happen? It could fall back and fall back in this range. So this market, the Hang Seng, China, Japan, all ranging, all going nowhere. These particular markets, when we look at the 52-week moving average, are flat. Let's move over to the next region. Let's have a look at Europe. So as we start to look at the European region, let's start our look at the FTSE 100 in the UK. So here's the FTSE 100 in the UK. We look at 2018, 2019, look at the 52-week moving average running right through the price action. It was ranging. However, all of that changes in 2020. Look at the 52-week moving average. It starts when we have the sell-off in February. The 52-week moving average absolutely plunges. The 52-week moving average is falling. Look at the price action. Since, even though we had that sell-off in February, that crashed all the way down to March. Then we had a little recovery up to May, and then we've had like a slow bleed all the way down to September. The market has slowly kept falling down. The 52-week moving average is telling us, that's the one that gives us our indication. The 52-week moving average is falling. So that's what's happening on the UK FTSE 100. It was flat, and now the FTSE 100 is falling, and the 52-week moving average confirms the same. Let's look at France. So here's the French market. In 2018, what do we see there? We can see the 52-week moving average was falling, and the price action was beneath the 52-week moving average. In 2019, the 52-week moving average was rising, and price action was above that 52-week moving average and was going up. So we were falling in 2018, rising in 2019, and for 2020, we have been falling. We've got that double top at 6,100. The market falls away, but look at the 52-week moving average. The 52-week moving average has been falling. We fell all the way down to 3,600 in March. We tried to make a recovery. We went up to May, where we hit that 52-week moving average, and we had price rejection. We hit it again in July. We had price rejection. We hit it again in August, and we had price rejection. The 52-week moving average continues to gently slope to the downside. That shows us the trend, not 1 week of selling, 2 weeks of selling, panic selling that we see. That doesn't mean that we're trending. However, we can clearly see both the FTSE 100 and France are in a downtrend. The 52-week moving average is showing us clearly that until we close above it and start moving higher, the 52-week moving average starts to bend and turn up. The trend on those two markets so far, those two European markets, are down. Let's look at a few more. So here's the DAX in Germany. What do we see? In 2018, what do we see? 52-week moving average, that's right, is falling. Those who are with me are saying that with me now. In 2019, what do we see? 52-week moving average is, that's right, rising. And then in 2020, from February, where we had the market sell-off, we see the 52-week moving average was falling. But now we see it starting to slightly rise again. However, we've got that heavy level of resistance at 13,500. What's the DAX going to do there? If it falls back from there, it's going to fall back into this trading range that it's had. This range around 11,000 to 13,000. That's pretty much where the DAX has been for the last 2 years. Again, look at 2018. What was the price of the 52-week moving average? 12,700 in 2018. In 2020, September, what is the price of the 52-week moving average? 12,200. We're pretty much the same, couple of 100 points in it. It's flat. It's not really going anywhere. That 52-week moving average shows you very, very clearly what the price action is doing. And the DAX has been pretty flat. Let's go over and look at Spain. Now this one's different. Look at the 52-week moving average. The 52-week moving average here is clearly falling. Let's look at the prices. In September 2018, we had a 52-week moving average that was at 9,900. Yeah, 9,900 52-week moving average in 2018. Where is it now? Well, 2020 September, we're at 7,800. That is a considerable fall. And yes, this market, the IBEX, the Spanish market, is in a downtrend. Look at the price action. The majority of the time, the price action has been below. It's not a little bit towards the end of 2019, early 2020, where it popped above. But the rest of the time, all of the price action has been below the 52-week moving average. And what does the 52-week moving average continue to do from February right up until now? That 52-week moving average continues to fall. A continued sign of weakness, of falling 52-week moving average. We had that plunge that fell all the way to March. We created that low at 5,800. Then the market tried to recover and get up towards the falling 52-week moving average. Remember, we're trying to see how to spot trends. As trend followers, this is how we do it. I'm sharing very powerful information here with you. What happens? We get up to 8,000, and what happens there? Price rejection. We get anywhere near that 52-week moving average that's falling, and we get price rejection. The market falls. We tried again to go back and move to the upside. What happened? In July, hit 7,600, which is lower than the previous high, and we get price rejection. August, we try again. We get to about 7,300. It's the best we can do, and we get price rejection. The market continues to fall. It's like a slow bleed. The market is drifting lower, and so is that 52-week moving average. Very, very powerful stuff. Don't worry about what happens in 1 week, 2 weeks. Don't get emotional about what happens in 1 week or 2 weeks. Look at the 52-week moving average. The trend is down in Europe, and we can see that on most of these charts that we're looking at. Falling 52-week moving average, falling price action, we're in a downtrend. Let's look at the FTSE Movespa in Italy. Well, what's the trend been here? 2018, we were in a downtrend. 2019, we recovered, and you can see the 52-week moving average rising. We were in an uptrend. Now, the falling 52-week moving average that we had since 2020. However, if we look at the majority of the price action here, we can see that this market is weak, really. It's falling. Because if you look at 2018, September, where was the 52-week moving average? Well, it was at 22,000. Where is it now? September, 2 years later, September 2020, it's at 20,000. 2,000 points lower. So we can see there that this market is falling away. There's weakness here. The 52-week moving average, it's gone down, it's gone up, it's gone down again, and now it's falling. And even more powerful, have a look at what looks very much like, to me, a head and shoulders. So we've got head here. Look at that high testing pin bar at 21,000. Left shoulders there at 20,000. Right shoulder here at 20,000. And then the neckline at 19,000. Once that neckline breaks, we're already in a downtrend. The 52-week moving average is already showing this market is weak. It's falling. The 52-week moving average is drifting ever lower. If we close below 19,000, we're going to see heavy selling in that head and shoulders pattern that there is showing us the market is weak. We know it's weak already because the 52-week moving average is falling. So that's the European markets. Now, if you appreciate what I've been sharing with you, please subscribe because I'm going to share a lot more of this information. I've been trading these markets for over 20 years and I'm just sharing my experience with you. A lot of people have got emotional about what's happening in the markets in the last couple of weeks. But if you look at the trend, the information was already there. You get a very clear, but people just don't understand, or it's never been explained how to follow trends. We can see European region is in a downtrend. We can see the Chinese Asian region is in a flat trend. Yeah, and we're going to look in a minute at America. So don't forget to subscribe. Don't forget to like, to share it with your friends, because you can say to them, look, I know you've always wanted to do this trading thing. I know you've tried all that short-term rubbish and you've lost a lot of money. This is a guy who's been trading. He's traded at the banks, showing you exactly how it's done. He's explaining trends. He's explaining how to make money. Follow what he's doing. It's working for me. It can work for you too. And just share that with your friends. Appreciate that. Let's move on. Let's move over to the region of the USA. Well, here's the Dow. I'm going to start with the Dow first and look very clearly here at the 52-week moving average. The 52-week moving average from 2018 until this year was rising. We had a bullish 52-week moving average. In fact, look at the moving average where it was in September 2018. In September 2018, we had a Dow that was at 25,000. That's the price of the 52-week moving average. Let's go up to where we had the collapse in February. In February, when the Dow started to fall, the 52-week moving average was at 27,000, nicely rising. Then we had this correction and the 52-week moving average started to fall. However, when we look at where the 52-week moving average is now, it's only at 26,500. So it hasn't done an amazing amount. It's had a very big volatile move up, a very big correction, another big move back up. And now we're seeing the market fall back into this range. But should we be surprised? Not really, when we look at where the 52-week moving average is. Now remember, the 52-week moving average was at 25,000 in 2018 September. Now, in September 2020, we're at 26,000, or nearly 26,500. So there's not that much in it. We've had some big moves up, big moves down, but really the market is flat. But there has been some bullish momentum behind the American markets. But let's go over and look at the S&P 500, the most watched stock market in or stock indices in the world. So the S&P 500, there it is. There's the S&P 500. And again, look at this one. What have we got? 2018, September, the S&P 500. What was the 52-week moving average? It was at 2,700. 2,700 in September 2018. Where is the 52-week moving average in September 2020, 2 years later? 3,100. This is an uptrend. This is an uptrend. The S&P 500 is in an uptrend, and you can see here the 52-week moving average is giving us guidance. When you see that rising 52-week moving average, that is your trend. Don't worry about 1 week of selling, 2 weeks of selling, 3 weeks of selling. That doesn't necessarily mean that the trend has changed. Even when we got the sell-off in February, even when we had the correction that dropped all the way down to March, we had an inverse head and shoulders that we can see on the RSI, and we moved back up again. Why? Because the 52-week moving average was rising. The market was bullish. There was bullish sentiment. As soon as the market dropped low, there was people that stepped in and bought this market up. A little bit of Fed stimulus too, but the market was bought up because we were in a 52-week moving average that was rising. We had bullish sentiment. We had those who were interested in this market, and they would buy the dips. There is your trend. Not 1 week of selling, 2 weeks of selling, or whatever. Just look at what the 52-week moving average is doing, and you can see a very good indication of the trend. Let's go over and look at the Nasdaq. Now, as we know, the Nasdaq and the stocks, particularly the top 10 stocks in the Nasdaq, have been absolutely on fire and have lifted the Nasdaq to absolutely amazing record levels. However, what is the trend? Because what we're looking at here, the 1 or 2 weeks of selling, does 1 or 2 weeks of selling make a trend? No. What does? Let's look at that 52-week moving average. So let's go back. September 2018. Where was the 52-week moving average priced in September 2018? It was at 7,400. Where is September 2020? 2 years later, it's a 2-year chart. Where is that 52-week moving average now? It's at 9,500. Considerably higher, 2,000 points higher. That shows that this is a bullish uptrend. That is why when we had the peak, when we dropped from the peak and we sold off from February high on that high testing pin bar, we dropped all the way down to March. We had an inverse head and shoulders, and the market got bought back up in record fashion. Why? Because the 52-week moving average was pointing up. It was a strong uptrend. We were bullish. Sentiment was bullish. There were buyers out there. As soon as it went down that low, they saw a bargain. It was like Black Friday for stocks. And so they bought up those technology stocks, and the market went roaring higher because the 52-week moving average is saying everything is bullish to those who understand trends. To those who don't understand trends, they don't even understand what's going on now. They don't understand why have we had these weeks of selling. Well, the market roared up. And whenever you roar up, the only way for you to take profits from a big move up is to sell. And when you sell, the market drops back a little bit. It's to be expected. It's healthy. If the market keeps going up, then we create a bubble and the market will collapse. But at this point in time, the Nasdaq is rising, the trend is rising, and we are correcting from a big bullish move to the upside. The trend is up, and until the Nasdaq starts to turn down and point down, the 52-week moving average on a consistent basis starts to point down and become lower than where it starts on the left-hand side of the page, or where it was 2 years ago to where it is now, where it will be then in a downtrend. But at the moment, the trend on the Nasdaq and the American stocks is up. And don't let anyone else fool you or scare you or misinterpret the current situation in the markets. If you ever want to know, look at the region and look at that 52-week moving average. Now, I know there's all sorts of things I've talked about here. I've got an amazing trend following strategy that's made a lot of money over the years, and people don't always understand it. And so I have a particular trend following strategy video that goes through this strategy, where to buy, where to sell, high test bar, low test bar, RSI, what patterns on the RSI, overbought, oversold, some of the things that you'll hear me talk about in my videos, and you might not quite understand them. So what you do, go back, watch this strategy video, and it will help you with that. Some people are really into stocks and momentum trading, so the other video is about momentum trading. It's the most recent video. Watch that, and if you watch the strategy video there too, it will help you understand momentum trading, and that might be your thing. If you've been watching this one and you've appreciated this, give us that thumbs up, and until next week, take care. Thanks for watching.